Hello and welcome to a new video. In this lesson, I'm going to start it with a question. Have you ever been in a situation where you have something like this? For example, a major swing higher right here. This swing could be an hourly swing, a daily swing, or a weekly swing. I don't care. And your trade idea is something like this. So the market is bullish, right? And you are waiting for a pulse on this swing. So taking liquidity from this swing right here, and then a market structure shift on the hourly, on the lower time frames, and you want to take a short position, right? But instead of this actually happens. The market is bullish, right? And just shift in market structure without purging this liquidity from here, without taking liquidity, and without violating this swing right here, shifting in market structure, and you are maybe here and still waiting for that purge and liquidity. That would never happen, and price just went down without you. And what if I tell you that there was actually a purge on liquidity from here? Market already took liquidity from here, but you just didn't see it. And the reason for that is a rejection block. There was a rejection block in this area. So in this video, I'm going to show you what is a rejection block and when you anticipate this move right here, meaning price shifting market structure without violating this swing right here. So stick around till the end of this video. And don't forget to hit that like button and subscribe to my channel so you won't miss any upcoming videos. And if you're guys currently searching for a reliable prop firm to start your trading journey, I highly recommend Trado. It's a new funding firm with huge potentials, offering some of the best conditions any trader could ask for. Firstly, they provide unlimited time limits on their challenges, allowing you to trade at your own pace and without any unnecessary pressure. Trado also has an exclusive trade locker platform, provides an optimal trading environment equipped with advanced chart analysis tools powered by TradingView, and has seamless execution capabilities. Moreover, they offer the freedom to trade with your preferred style and strategy, as they have no consistency restrictions. This means you can implement any trading approach that suits your preferences. One standout feature of Trado is their exceptional customer support, available around the clock 24/7. So, whether you have questions, concerns, or require assistance, their dedicated support team is always there to provide prompt and reliable guidance. So if you are ready to take a chance and give Trado a try, be sure to click on the link provided in the video description below. It's a golden opportunity, guys, to kickstart your trading career with a trusted and promising prop firm. So, rejection blocks. Now, the structure of this video is going to be fairly simple. First of all, I'm going to give you what is the definition of rejection block, the logic behind it, and why it should work on rejecting price to the downside or the upside without taking the upper swing high or lower swing low. All right, and then I'm going to give you live examples from the chart. Now let's start with a crude example of rejection block. So how a rejection block look like? And let's start with a bearish rejection block. So a bearish rejection block is something like this. You have a swing high, right? A swing high is defined by a 3-candle formation, and the middle candle is the upper one, all right? But the difference between a swing high that has a rejection block above it and a normal swing high is this wick right here. So a rejection block is this when a swing high or a swing low has a tall wick to the upside, right? So this gray rectangle right here is the bearish rejection block. So the next time price is going up, you don't expect for price to take this upper wick right here, but instead you can, when price hits this area right here, you can look for short positions when the criteria are met. And what is the logic behind it? Why this gray rectangle can hold price, and why price didn't go all the way to this area right here to take liquidity? And the reason for that is price already took liquidity. For the liquidity is on this, just above this bodies right here. And remember, the wicks do the damage and the bodies tell the story. So the volume, the bulk of the volume of the orders here are on this bodies right here. When you see this long wick right here, all right, This wick is usually a sudden move to the upside or the downside in case of a bullish rejection block. So this wick is a sudden move. For example, price moved like this, went up and then immediately went down. So this is the wick. If you go to the lower time frames, you will see this formation right here. And the reason why price should not go all the way to here is it's because there isn't much liquidity here, right? Because there were few people who participated on this move right here. And if you go to different brokers, for example, we are on Wanda broker. If you go to different brokers, you're going to see that this wick right here, the length of this wick is different from one broker to another. But the bodies are the same. The prices on the bodies are all the same. So the volume is on the bodies. So when price violates these candles right here, these bodies right here, it already took liquidity, and then you can expect a shift in market structure. So this is the bearish rejection block. Now let's move on to the bullish rejection block, and it's pretty much the same. So this is the bullish rejection block. You have a swing low right here, a 3 candle formation. You have this middle candle right here with a long wick to the downside, you can see. So this will become a rejection block, a bullish rejection block. So the next time price retraces to this area right here, you don't anticipate for price to go all the way to here. The liquidity is just below this bodies right here. So you can anticipate something like this, right? Now let's move on to live chart examples, and you can understand better. Now let's start with the first example, and this is the New Zealand dollar against the US dollar. This is the daily chart, and you can see that we have a swing low right here with a relatively tall wick to the downside. So this would become a rejection block, right? All the bulk of the volume is just below this bodies of the candles right here. And if we extend this to the right, so you can clearly see that when the market retraced to that rejection block, it didn't have to take liquidity from all the way from that lower wick. It hit that rejection block and shifted from a sell program to a buy program. So you have that market structure shift right here. We have another one right here, retracing to this order block, and we have another order block right here, a fair value gap, another fair value gap right here, and you can see that we are on a market maker buy program. So if you waited for that pairs on that lower wick right here, then you would never participate in this move right here, and you have missed all this move right here. So this is a valid rejection block on the daily chart. And here we have another example. This is also the New Zealand dollar against the US dollar, the hourly chart. We have this major swing right here on the hourly. We have this long wick. Next time price retraced to this, it didn't have to take this wick right here. We took liquidity from this bodies of the candles right here and then rejecting lower. We have another rejection block right here. Next time taking liquidity from here and then continuing lower, right? Moving on to another example. So we have this swing right here. We have a tall wick to the downside. This is a valid rejection block. Next time price retraced to it, rejection block, and then shift market structure and continued higher. Let's take a look to another example. And we have one here. So we have a swing low, a tall wick to the downside. So you can see that these bodies right here violated the bodies of this swing right here, but not the wick, and then continued higher. So you can find an opportunity to go long on the lower time frames here. We have another example, and this is only one chart, right? So only one chart. So you can see that this rejection blocks happens so often, right? And you have a swing right here, price, then take liquidity violating these bodies right here, and then continued higher. So we have come to an end of this video. If you have any questions, please DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.